A very good evening to all our viewers. Welcome to this week's edition of The Agenda. My name is Taiwan Jabela, your host. Tonight, we are privileged to have the Minister of Mines and Energy, Honorable Tom Alweendo, to answer the question on everybody's lips. Is the oil ours or not? That is what has been happening in the last couple of weeks as far as the discovered oil of the Namibian coast is concerned. Minister, thank you very much for making time.
Thank you very much, Taiwo, and good evening, and thanks for having me.
Wonderful. Maybe to start, before we go to the critical question, let's talk about how significant, commercially speaking, is this discovery of oil of the Namibian coast by Shell and I think Qatar Energy.
The discoveries are quite significant.
Yeah.
As you might recall, there are two discoveries.
Yeah.
The first one is a discovery that Shell, together with Qatar Energy, have made. Mm-hmm. And soon after that, it was the one which was between Total Energies and Qatar Energy. So there are two discoveries. Mm-hmm. And as you also know, in both discovery, Namco has got the 10% free carry interest in those two discoveries. But the discoveries is great. It's commercial. But if you are asking about the numbers, I have always seen people talking about the millions or billions of barrels of oil. Yes. That kind of numbers are still to be discovered. Those are still to be analyzed and actually be discover what the real numbers are. And therefore, whatever people are now talking about in terms of the numbers, it's really probably premature really. But at least suffices to say that the discovery is commercial enough, and such then that there are no issues whether are we going to be able actually to produce or not produce. I think is the investors have confirmed that is sufficient enough for production.
Okay, wonderful. But while we are on that, Minister, what is the latest regarding the Kavango project, Recon Africa? I mean, insofar as any discoveries or the magnitude of any discovery is concerned.
You will recall that Recon Africa started with their drilling campaign last year. I think it was in December. Yeah. So far, they have drilled 2 wells. Mm-hmm. They are now busy with doing seismic work, just actually to discover or to decide where again to drill more. Mm-hmm. But the 2 wells that they have drilled, the results, although do not say they found a discovery, the results was quite positive that actually there is a sign that actually there's hydrocarbon where they have drilled. Mm-hmm. Mm-hmm. So we still hopefully that when they do more work and when they do more drilling, we still hopeful that a discovery could be made going forward. Mm-hmm. So they are still busy with their work to again find out whether actually we do have a discovery.
Mm-hmm, mm-hmm. Wonderful.
And I think also maybe just on the all discoveries now, the Total and the Shell one. Yeah. We also need to understand that it's a discovery. It's one thing to have a discovery. Yeah. And as I say, you still have to do more analysis in terms of quantifying the barrels of oil, for example, that is going to be flowing from those wells. Yes. But also, let's just understand that it's not that we're going to have oil tomorrow, as some people, the way people are now talking, it's almost like there's going to be oil tomorrow already. There's a number of work that must still be done for you to build the production facilities and all the infrastructure that you need to do, apart from the technical analysis that you must still do. So typically, this could take 4 to 5 years. Yeah. I think the fastest production that was actually, I can remember, is probably in Ghana when they took just over 4 years to actually, after the discovery and go into production. So let's just know that it's not that there's going to be already revenue flowing from this, at least for the next 4 years or so.
It's a good explanation, Minister, because I suppose, I mean, this week another oil increase kicked in, and for us as end users of that product, you know, we are so desperate. But it's good to not put our hopes high and think that within a matter of months we'll have oil happening.
Yeah.
Now,
but
yes.
then again, it's good that you make that point.
Yes.
The connection between the fact that you have discovered oil.
Yeah.
I also have to say, necessarily because of that discovery, fuel products should be cheap.
Yeah.
It doesn't follow. It does not really follow, because remember, this is a discovery of crude oil.
Yes.
And crude oil has to be refined into petrol or diesel.
Yeah.
So what will determine the price of that diesel or petrol?
Yeah.
It will be determined by the cost of production of that crude oil.
Yes.
And depending on the nature of the well, where it is. Our well is quite in the deeper waters.
Yeah.
And therefore, chances are the production cost will be much, much higher than the production costs, for example, say in Saudi Arabia, where the well are very, very shallow and is actually on shore. It's much easier actually to extract. So let's also not really make that straight connection to say a country that has got crude oil, that has produced crude oil, necessarily means that you are going to have the price of the refined product being cheaper just because you have the crude oil. It really, really depends on the cost of you refining that crude oil into a final product.
That is a very interesting observation, Minister, and thank you for making that point, because what is the situation in Angola? Because in Angola we have kids. You go to Chicago, you just cross into Chicago, into Angola, kids with small containers of oil, and we are told Angola is also, that is also crude oil to a very large extent. How is the situation there in the context of what you just said?
For example, in Angola, Angola is probably the second largest crude oil producer on the African continent, Nigeria being the largest one. But Angola still import 20% or 80%, sorry, 80% of their fuel consumption needs. So with all the crude oil that they have got, they only refine up to 20% of their own need. And that is why I say, just because of that, you can't always make that connection. But what you're actually trying to refer to say, when people argue, to say, well, the fuel in Angola is cheaper, and it's probably cheaper because
it's not refined.
Yeah, no, people say it's cheaper because they got crude oil.
Oh yeah.
But the true fact is that Angola buys 80% of their need from the very same markets where we buy ours, at the very same cost where we buy ours. The difference between them and us is that when they buy that refined product, that 80% of what they need, they then use their revenue, which they get from their crude oil, to subsidize the price of the refined product. That's what makes the pump price in Angola cheaper. It's not because they have got crude oil. It's simply because they're in a better position because of the revenue that they get from their crude oil. They can then use that to cushion the consumer from the high price. But they do buy the very same product from wherever we're buying it at the very same cost.
Okay. That's a very good explanation, Minister. Now to the big question, and I know that you've tried also to contextualize the ownership of Namibian oil on your social media platforms. Before I pose this question, I just want to read Article 100 of the Namibian Constitution that talks about the sovereign ownership of natural resources. It says, to the reader, to the viewers in particular, land, water, and natural resources below and above the surface of the land and in the continental shelf and within the territorial waters and the exclusive economic zone of Namibia shall belong to the state if they are not otherwise lawfully owned. In what way do we sketch the ownership of Namibia in this statement?
I'm not a lawyer to interpret the Constitution. I've heard people trying to interpret that Constitution.
Yeah.
And I think it's unfortunate, where the narrative has come.
Yeah.
The issue about is the oil ours or not ours.
Yeah.
I'm not so sure really that's what matters. Shouldn't we actually start talking about, as a country, as a society, what are we going to get out from this oil discovery? Mm-hmm. What is that are we supposed to gain from this? Rather than actually really being hung up on the narrative that says, and having newspaper headlines, and I think you guys in the media are also trying to, make the situation just worse.
Yeah.
But for me, really, it's better for us to start discussing, and now we've got the oil discovery. Yeah. What will that mean for the country? Whether in terms of the agreement that we have signed, or whether in terms of the legal legislation that exists, what is that? What Namibia is going to get out of this oil discovery? And that's, for me, that's what matters. And I will then go as far to say, when people say, oh, we are only owning 10% of the oil through Namco. And therefore, the investor gets everything. They get 90%, we only get 10%. That's not really correct in itself. When you invest in something, when you invest like you are investing in the oil production, and you're going to have these oil productions, you're going to have the oil that you're going to sell. When you sell that oil, you get the revenue. What should be of interest to us? Of that revenue that you are going to get from having sold that crude oil, how much do we get from that revenue? That's probably a better understanding to say, what are the benefits we are getting from that? And right now, what we get from that revenue, number one, obviously, you get to have, from that same revenue, that's where you are going to pay your employment cost. Most of the people who are going to be employed will be Namibians. They will be paid from that revenue that you have got from having sold the crude oil. We are going to get a royalty of up to 5% from that same revenue. And of course, that revenue will pay all the other costs. We are going then, there's going to be an income. We are going to take 35% of that from the very same revenue. We're going to take 35% of that. And eventually, after all the other cost is taken away from that revenue, whatever is remaining as that profit, which is probably eventually only 20% of the total revenue, that remains as profit. That's now where you are getting that 10% because you got equity shareholding of 10%. So when we talk about we only get 10%, it's really, really not the right way to look at it.
Yeah.
Look at the total picture and what does the country get out of that. And therefore, I will probably rather argue to say, now in this revenue sharing, those bits and pieces we are getting out of that, is that really the best we can? Can we get more out of that? Rather than really trying to say, oh, we only get 10% and the other got 90% and like, we're not getting anything out of that. But really, if you look at that picture, I just try to explain it. Our calculation essentially says that you're actually getting up to 55% of that revenue as a country. And if I look at that way, then the 10% doesn't really mean anything. You do not always get the benefit by having an equity share. That's not only how we get that from that cake. We get that from the cake in other ways other than having an equity shareholder in the production.
Wonderful. That's a very, very lucid explanation, Minister. Before we go for a break, how do you compare that scenario to what government has brilliantly done with Namdeb? Because everybody in the BS Marine everybody's talking about that template that already exists to say, if we could do it with the diamonds, when Namibian government and the BS entered a joint venture, 50-50, and still on top of that, you still have royalties and taxes. How is this going to be different in the context of oil?
Yeah, I think there's a bit of a difference. It's true that the scenario I've sketched, where you have to look at the revenue rather than looking at the profit, is the same thing with the mining sector. We also get those. We get royalties, you get cost of employment, we get that, and eventually you get also then a profit on whatever is remaining. And with Namib's case, we do have got 50% shareholding. But I think the difference is this. I would imagine that if the fact that the investor brings all the money, and most of the investors would have actually borrowed that money. It's not actually money which they got out of their own pockets. They're going to have to pay that investment back. So I would imagine a situation where if the investor has, through the years, have managed actually to pay back all that, which means all the capital investment which they put in has been actually repaid. Mm-hmm. Is then possible to say, well, now that actually the investor has got everything out of it, and all what actually they are getting is actually is the profit. Yeah. So we can actually share that profit on a 50-50 basis. Mm-hmm. Because then the investor doesn't have the argument to say, well, I still have got not only this, I also have to pay back to the people I got the money from. Mm-hmm. So in case of Namdeb, one can probably argue to say this is a company that has been in operation for years and years, and therefore they cannot actually argue to say they still have got capital mm-hmm. to be repaid. Mm-hmm. But when you got an investor starting off, and you would want to say that's the arrangement you want, mm-hmm. I'm not so sure whether you're going to have any investor who will say, yes, I'll invest on those terms. Mm-hmm. It just does not sound that it's a possibility. But yes, after some times, you could actually think of the scenario to say, well, you actually don't have any other repayment. Everything you actually, after all your costs of production, it's just pure profit that goes in your pocket, and therefore, can we actually look at that? That scenario could be something that will be thought of. But let's also understand this. If you also then own a company in that proportion, like we do now in Namdeb, if that companies would want to actually reinvest or do something, you also are going to have to come up with the money as a shareholder. So at times we think about the shareholder only getting something out of the company. But as a shareholder also, when something goes wrong with the company and the company needs to have money, who do they go to? To their shareholders. And you cannot say as a government that looks, you want to be a shareholder, but when there's money required to be put into the company, actually to prop up the company, for example, should something happen to that company, suddenly you want to say, well, I'm the government, therefore I cannot put in more money. You are a shareholder. Yes. So it is, but let's also agree that, become a shareholder, but there are also then responsibility of the shareholder once you are in that position as a shareholder. When you are not, and you're only simply a regulator, obviously you then obviously just get what you get out of that. But I'm not in any way arguing that it's not the right thing to do, but also just to know that as a shareholder, there's some other responsibility and obligation you have as a shareholder in any other company. Indeed. Thank you, Minister, for that clarity. We go for a quick break and then return for the second part of the show.
I usually don't drive this car around. It's a standing base. I fill up my car for 850, which that gave me a full tank. I used to use this car between Rebot and Windhoek. Yeah, once you reach home in Rebot, it's almost a half tank. It's from Windhoek to Ketmas. That is the longest I have driven with this baby. I think Namco is changing the game because their service is very organized, clean. Even their takeaway department, Namco is the one. There's no country like Namibia. Namibia is a very beautiful country. That's why I'm part of it.
We continue with Minister Tom Alweendo. Now, Minister, you have painted a very clear, the clearest picture painted so far insofar as the ownership of this critical resource is concerned. The 10%, is it something that kicks in automatically as soon as a discovery of that nature is made, or is it negotiated?
You know, the way it works in both the mining sector and also in the petroleum sector, yeah. People normally will then apply for the right to explore, either to explore for minerals or to explore for petroleum. Yeah. With regard to petroleum, then the practice has been that Namco, as the government national oil company, yeah, by negotiation, must have a certain percentage ownership in that exploration right, away from the exploration right. And that percentage is free carry. Namco does not have to pay any money to do exploration. You get it for free. And the consideration of that is simply because, number one, if you got a national oil company, what you want really at the end of the day is to capitalize that company such that at some point it will be strong enough to be able to be in a position to actually, do its own explorations, actually be an operator like all the others. So you need to start actually capitalizing that company, and that's why you've got that free carry for where they don't have to pay anything for it. Now, the 10%, as I said, is not legislated. It's by negotiation. But we are in the process for some time now where the petroleum legislation is being changed, whereby that minimum free carry is being legislated. It's no longer up for negotiation. Whereas if you negotiate, it depends sometimes on the circumstances. It depends on what are the issue for negotiation. But it has been it became kind of a practice, like it became 10%, but it's not like it's any law to say it must be 10%, but it has become like a practice. But by the time the new law comes into being, it has to be legislated to say, this will be the minimum. Whether or not it's going to be 10%, it's going to be higher or going to be lower. So far, we are still negotiating with all the stakeholders to make sure that this will be what is going to be known. But I also want to add something. I think earlier when we were talking about what we get out of this thing. I think the economy can get much more out of that, even not just looking at the revenue from which you're going to get from the crude oil. Just imagine, simply because you do have this industry, there are some other now subsectors that need to actually start up to be able to service that industry. Yeah. Whether it's in terms of infrastructure that they might need to use, or whether it's in terms of the services that they need to use. What we need to do is just to make sure that those services, what will be required by this new oil industry, as much as possible, those should be services that must be provided by the local economy. And that's why right now we also have what we call a local content policy that has been approved. And it talks to those issues to make sure that we do not want oil companies to be actually sourcing their services or their materials all the way from outside, even when it can be done here. But it also means that sometimes it's good to say that that's what we wish to do. But we also need to have some concrete action that are going to be put in place to make sure that the local economy can also actually supply those. Because if you legislate that, but somehow still your local economy has got no capacity to do that, it will probably not really, come to anything. And therefore, as part of that strategy, we also need to have a clear what will be those actions to then ready the local economy that they are in a position to provide those services that will be needed by the local, by the new oil industry. Mm-hmm. So apart from the revenue that you're going to get from the direct industry itself, mm-hmm. there are certainly all other concomitant or associated services that will be needed. And if we make sure that those are actually offered by the local economy, by the local entrepreneurs, that in itself also will actually go into the local economy, and therefore Namibia are also going to gain from that.
Indeed.
The other thing I forgot to mention is the fact that apart from the profit, which is now taxed at 35% on the income of the company is making, there is also a provision in the current law that says that should you be making a profit above a certain threshold, there will be an additional profit tax that will be levied on that additional profit. Mm-hmm. So you don't only get on the 35%, I think you can also, after that threshold, you can also tax up to 7% of that additional profit. Mm-hmm. So there are really a number of income streams that come from this cake.
Indeed. Now, Minister, how much planning is happening in government ahead? I mean, it looks like it's a done deal now. We are at a point of no return as far as creating this industry is concerned. You spoke earlier about how there is no automatic direct relationship between the oil discovery and the retail price at the pump. But you also alluded to what Angola has done to sort of cushion, to protect their citizens against the high oil prices. So against that reality that there's no direct link, how much effort is government going to embark upon to make sure that even if the production costs are high, that somehow as an oil producing country, we ought to be paying a little less than we are paying now?
You are making that as a factual, you're actually stating it to say you should pay less.
Yeah.
Even it costs you more to get the product. Your own cost production it's not somewhere else. It's exactly what it costs you.
Yeah.
That again can only happen then if you decide to subsidize the price. Because just imagine if they are talking to say why don't we have a refinery? Let's assume that we can have a refinery.
Yeah.
The refinery could either be, it could be the current producer who then decide to invest in the refinery, or it could be another investor who then buy the crude and use that crude actually to refine in that refinery.
Yeah.
Whoever actually got that, it will be a separate investment, right? Now, that investment will have its own cost structure. They refine the crude and they say, well, this is the diesel, this is the petrol. This is how much it costs us to, of course, having bought the crude and also having then refined. This is the cost and therefore this is the price. And the price normally would be my cost plus a profit margin. And they sell, and then they say to you as a consumer, well, this is what the price is. Now you say, well, this price is too high. And maybe you are right, it's too high. And again, you know, when you say it's too high, it's normally high compared to something else. So, but generally it's too high, it's unaffordable. Now, the producer will say, well, if I'm not able then to sell at a price that can cover my cost, I'm not going to invest. Why would I invest? Why would I have to buy the crude? Number one, build a refinery, buy the crude, employ people to refine these things, and this is my cost structure. But I'm not able then to sell that at the price based on what I invested. In that scenario, it can only mean that then nobody's going to invest. Now, if you still want them to have that investment to proceed, you are then basically then suggesting that, like what happens in Angola, to say, well, then the government have to find some revenue in order to enable this investment to continue, to subsidize the difference between what the consumer is able to pay and what the seller of the product actually have incurred as a cost plus his profit margin. Yes. So that difference, somebody has then to subsidize it.
Yes.
Now, if the government is in a position to have sufficient revenue to do that, obviously that would be possible. It will again just depend on, is the government in a position to take the revenue somewhere and actually then fill that gap, the difference between what the consumer can afford and the cost of actually making this product, which is now the diesel or the petrol. So it's not really as straightforward as that, but I know of countries that actually they have subsidized the price of the final product. But again, it's only because they are in a position, they are able to do that. And should we, as a government, then find ourselves in that position that you are able to do that, well, it could be a consideration.
No, the obligation, in my view, is really for the state, not the shells of this world, because, I mean, conventionally, everywhere where oil is produced, the prices we hear are much better. I remember, I mean, Nigeria, for example, has a lot of incentives for the end consumers, and I'm just thinking that our government, because, I mean, fish, Minister Alweendo, fish in Walvis Bay ought to be cheaper than in Livingstone in Zambia, where, because you own the resource in Walvis Bay, you are at the source, and you ought to be, there isn't a lot of logistics involved for that fish to land on your table compared to Lusaka or Harare. So I'm just thinking that conventional wisdom would dictate that somehow a product that is produced here, we ought to have a slight advantage.
Yeah, I would agree again, but again with the qualification to say it's true if then your local production cost is lower than a production cost somewhere else. But if it's not, if your production cost is just as high as everywhere else, I can only sell it to you cheaper if I had to subsidize you. So, but the example you gave, like in the fishing of Walvis Bay.
Yes.
I guess if I'm a producer, or if I catch fish in Walvis Bay, then I sell to people in Walvis Bay, still with my profit margin. The difference between the Walvis Bay price and probably the one in Katima will probably be the transportation cost. So if you follow that logic, yes, it makes sense to say it should probably be cheaper in where the commodities be made. And that is why I think even when we come to oil prices, you have noticed the petrol price is still cheaper, a little bit cheaper in Walvis Bay, because the difference, because the fuel comes through Walvis Bay as a harbor, and the difference between that price and somewhere else is actually the cost of transportation. So I do agree to say logically, you could still have a cost differential or price differential depending actually where the market is.
Indeed. How much is the state, your minister in particular, preparing the likes of Namco ahead of that boom that we anticipate? I mean, you spoke about how Angola, the Angolan oil is refined 80% elsewhere. I mean, if we have this 5 years ahead before actual production could actually take place, how are we capacitating the state machinery, including the likes of Namco, to say the refinery now start putting it up already, or what is it? Those kind of possibilities.
In terms of Namco as a national oil company, you know that Namco also has got their own, they do get their own exploration rights, where they can actually start doing exploration on themselves, by themselves, and even make a discovery. The reason why they don't do that usually is because you don't have all the capital. And sometimes also in this industry, even if you have the capital, you always want to share the risk with somebody else. That's why Shell partner up with Qatar. That's why Total partner up with Qatar. I'm sure Shell could have found their own money to do that, but they would rather want to share the risk with somebody else. And therefore, it's understandable that even when Namco can actually go it alone, if they had the money, they will probably not want to do that because you must always share the risk. But this is a high risky business. To drill one well, for example, the one they drill now, it could cost you $75 million US just to drill one well. And most of the time, we won't find anything. So, but to prepare Namco is just to make sure that at least they continue, with their money, they will probably get into the partnership which they have got. That money should then put in a situation, or put them in a situation where they can actually have the expertise to be able to actually do drilling by themselves, and at some point become a strong national oil company where they can actually be doing things by themselves. Even if you were to have an equity shareholder, a third party to come and share the risk with you, maybe it's a situation where you retain the majority in the license, and somebody else come and actually share the risk, but they will have a minority right in that license. So I think really, having a discovery now, that there will be some revenue that will flow to Namco, and that they should then use that to prepare themselves as a company to become much stronger in terms of technical skills. And this is a really highly, technically intensive kind of an operations.
Yes.
Without that, you can't really do much.
Wonderful. We go for another break and then return for the final part of the show.
I usually spend about 600 Namibian dollars for a full tank, which usually lasts me the entire month because I do not drive around that much. The longest stretch I've ever gone with my car is to Kamanyap, and that was for leisure purposes. The service at the Namco service station is excellent because when you get there, you're met by employees who are always ready to cater to you. Whether it's them fueling your car, checking your tire pressure, offering to wash your windscreen, or checking your engine oil. The one thing that makes me proudly Namibian is being able to experience Namibia in all its beauty through travel.
We continue with Minister Tom Alweendo. Now, Minister, as we conclude this conversation, I just want to give you a sketch, because you spoke about Nigeria being the largest oil producer in Africa, followed by our neighbors, Angola. So it says here that Nigeria discovered oil, I think in 1956. 1956, you were not even born yourself.
Well, I'm not so sure about that, but yeah, I think, I was just,
But,
I wasn't.
yes. So, and then they started oil production around, in the late 50s, like 1958, 1959. That is when they started production. Qatar, on the other side, on the other hand, they discovered their oil in 1977. In the 1970s, basically. And Qatar, as we speak today, is only 15th in the world in terms of, the volumes of production. Nigeria is 11th. So Nigeria is a bigger oil producer than Qatar. And only in 1977 did Nigeria, they discovered their oil in the 50s. Only in 1977 did the Nigerian National Petroleum Company was founded. So, meaning that there were foreign players in that space. And then Angola, which is the largest, second largest producer in Africa, of course, the point I'm trying to drive to, Minister, is do we realize what an opportunity we have here as a country? Because other countries in Africa have underutilized. I could boldly state that they underutilized that opportunity. Nobody wants to live in Nigeria today. The Nigerians are all over the world because they don't want to live in their own country. Angola is not the most country that you want to live in, even as an Angolan-born person, because the revenues have not been really used to emancipate their society, their nations. How are we monitoring this history, and how prepared are we to do things differently?
Okay, the current narrative we are talking about earlier about is the oil ours or not ours?
Yeah.
You know how that started? It was started when the president was asked by Al Jazeera to say, now that you have made a discovery, is it going to be a curse or is it going to be a blessing? But as I said, unfortunately, that really just became out of context. That's not really how the issue, that's not really what it was about.
Yeah.
What the president was trying to explain was to say, no, in that question to say, will this become a curse or a blessing to you as Namibia? And that question is always asked to say, because oil all the time, it was like, people call it black gold, when you discover oil, because the revenue that you have got usually can really transform the country now. Either you can transform the country in a good way or in a bad way. And that's why that question always been asked. My answer to that question, would that be a curse or a blessing? It will depend on what we decide to do as a country. What do we want to make sure that this become a blessing and not a curse? And it can become a curse in two ways. In countries, once it can be like suddenly you got oil, and that's the only industry that you want to actually push, because all the other sectors are no longer actually important. Now you're only actually focusing on one particular industry. But if you do that, obviously, it cannot help an economy, cannot help a country to proceed. I mean, eventually the oil will not be there, and then suddenly it's gone, and what do you do? So you don't want to go that road. Or it can also become a case because of the substantial revenue that you are going to be getting out of this. You do not actually use it properly, or it gets stolen, or it gets misappropriated, or only some people benefit, but does not really go to the state so that the state can distribute the revenue from that, in a fair manner. So that one way can become a curse. Now, as Namibians, what we want to do? I'm sure that's not what we want to do. But for that not to happen that way, you have to have very good, strong institutions. Whether it's now political institutions or economic institutions, but you just need to have strong institutions that have got, systems and processes that can protect the revenue that you have got and make sure that they are used in a better position. If I look at really where we are politically, our institutions or the economic institutions or the legal institutions, I think we're in a good space where that this should become a blessing to us. But obviously when things happen, suddenly people will start, poking holes into these things. But really where we are, we've got very good institutions. I don't see why that should really become a case for Namibia. But again, as I say, in the end, it's what we decide to be. But in terms of what needs to happen, is there. We must just maintain that, make sure that we use that. In fact, you must also recall, for example, for you also then to become a blessing, when you find something like this, you also want this to be not only beneficial to the current generation, but you also want to be beneficial to the future generations. In other words, as much as you get, use it for now for this current generation, but also leave something for the future. I think in that respect, we're also even much ahead because, as you might remember, last year, we have established the Sovereign Wealth Fund, and the idea is to actually to put some of the benefits or revenues we get from, like the oil now we have discovered, all our minerals, to go into that Sovereign Wealth Fund, so that it can actually be there to serve the future generations. So really, I think we are in a better position to deal with this much better than maybe other people. We have learned lessons. And you also have to remember that, you know, suddenly when you find oil, they always, I can imagine even those years when Nigeria actually discovered the oil. I mean, the geopolitics of the issue. But I think the world have moved on that, you know, just because you're a developing country or you're smaller countries, suddenly there are people who can simply just get things out of you. I think the world has developed in such a way that even if you're small or even if you're developing countries, if you have got your own internal systems and institutions, you should still do something in the best interest of the country. And as I said, we certainly do have those institutions. I don't think we should really be too worried about this becoming a case for the country.
Yeah. The final question then, Minister, is in terms of legislation, are the things legislatively adequate the way they are, or the new reality means that we must also then go back to some of our acts, like maybe the Petroleum Act or whatever, to make sure that we also safeguard ourselves against exploitation and other disadvantages in view of this new reality?
Yeah, but however, you know, legislation again is not something that is cast in stone.
Yeah.
When you think about the legislations, obviously that legislation will be informed by what is happening and also what you think might be happening in the future. But it's not true that, you know, just because you got the legislation in place that we might have come up with like 20 years ago, that might still no longer be as relevant as it was then. You have learned new lessons. The world has moved on. People started to do things differently. And therefore, there's always an opportunity for you to occasionally review your legislation to say, does it still serve your purpose? Have things changed so much that this particular legislation is no longer actually useful, or it does not really give you what we are hoping to get out of these legislations? Simply, maybe the rules of the game have changed, and therefore you cannot now apply this legislation to the rules that are no longer the same rules. So certainly there will be a chance that you always need to look at your legislation and say, are they still serving the purpose? But you also need to do that in a very systematic way, such that you do not then suddenly change the rules such that it's no longer able then to attract the investors that you need. Investors go to the countries simply because, number one, they look at, you know, what are the legislation framework, what are the institutions. So when you then review, make sure then that you do not do that in a way such that it makes it difficult for people to continue to want to come and actually invest with you. And the way to do that is basically by having a discussions. Yeah. Not only the investors, but you have actually the discussion with the people who are beneficiaries of the law that you are going to be making. Yeah. And when you do that, through that discussion, obviously, you're going to come up with the best way, because it was not something done under the table. It was discussed, it was debated, and therefore what normally comes out is really what can work for both.
Indeed.
But certainly you need to actually always now and then look at your legislation framework.
Indeed. Minister, thank you very much for your time. We really appreciate it.
Thank you very much.
Yes. That was this week's show. Thank you for watching, and good night.